Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. The key move here in recent times, as I said 3 weeks ago, has been the move back down below the super significant 50% absolute Fibonacci line at 218 3/4. This has now quashed earlier ideas of a handle, which is a specific pattern addition to a rounded bottom, and also the bull flag come bullish halfway hesitation pattern formed from about mid-February to the end of May. Now, unlike some of the other grain markets, we do not really have a double top pattern here, lopsided or otherwise, in the recent past. What we do have, or should I say did have, was a mid-February to late June uptrend, currently broken at 215 1/4. That looked like it might have been part of a very big February to late June bull channel. However, this bull channel is no longer valid, though I do note how the market has been trying very recently to run along the underside of this broken lower bull channel line. We nevertheless have seen some somewhat imperfect stalling of the drop when prices moved down to 208 to 212 area, thus giving the impression of an action since the end of May being a possible hesitation, even perhaps a halfway hesitation pattern being constructed, or alternatively a possible diamond pattern being formed. If this hesitation were to truly become part of a corrective hesitation in a large May-to-day action, then we would have possibilities of prices initially reaching 204 1/4 once again, which is not too far and ties in with the lows of May and April, as well as the congestion seen between December 18 to February 2019, between 204 to 208. So, perhaps this might be a bit more substantial as support, as it might seem at first glance. Notwithstanding this somewhat ancient support, the secondary harder possibility, which is still a possibility, is down in the 194 even zone. Much as I said on Kansas City wheat, the idea of a hesitation or a diamond pattern continues to be early speculation on my part, and it may not happen, but I'd rather get it out there now and look foolish than look a bigger fool if prices start motoring lower in between my commentaries. I'm not happy about calling any bearish pattern triggered as yet. We'll thus hold off clarifying any targets below one more time. Minneapolis wheat. The hesitation seen since the end of May to mid-June was centered around and rotated about the mauve medium moving average, currently at 652 even, as well as the congestion between 650 to 651 3/4, around the August 2018 high at 650 even, plus outlying the April 2024 low on the down at 634 3/4 on the downside. Now, prices settled on and around all these for a little while and even created a weekly key reversal up 2 weeks ago. However, as I said earlier in my Kansas City wheat commentary, and I quote, I was suspicious of it because I had also detailed what I thought would be some more forceful patterns in operation, especially on the downside. You see, this move lower, much as in Chicago wheat, opened up the idea for a possible mid-April to date double top pattern. Though I have to admit it's one very, very lopsided double top. End of quote. It's exactly the same situation here in Minneapolis wheat, but a little more advanced. I spoke about this 4 weeks ago when I said, and I quote, the importance of this 50% Fibonacci line. Now this is the 50% Fibonacci line of the May to August 24 move at 669 1/2. The importance of this 50% Fibonacci line is that it is also the base of a mid-April to date double top Adam and Eve type. And the break below the 50% Fibonacci line is the follow-on move lower. Thus, for the pattern, we have a primary target X2 down in the 635 1/4 zone, right on the April 24 low, with a secondary, harder to achieve, target X3 down in the 606 even zone, right on the April 2021 low. And that's the end of the quote. 2 weeks ago, we saw that leap for lower onto the April 24 low, and last week prices have gone even further through target X2 at 635 and a quarter, and down to the secondary harder to reach target X3 down in the 606 zone, and below the slowly rising gold long moving average, currently at 616 even, as well as the October 2018 high at 611 even. And that's to land on the April 29 low at 606 even, and this is where I deal with that hesitation seen earlier over most of June. It was, as I said 3 weeks ago, and I quote, and it's a long quote, I'm afraid, because if it is a corrective hesitation, then we might possibly have a larger move lower. From the end of May to date, of initially a possible move down to around the 61.8% Fibonacci area, and a secondary harder possibility of a move down to around the 569.5 area. These are not targets as yet, just possibilities. And will only happen if what we see this past week or so is a corrective hesitation. However, much as I said in Kansas City wheat and in Paris milling wheat, this is early speculation on my part, and it may not happen. But I'd rather get it out there now and look foolish than look a bigger fool if prices start motoring lower in between my commentaries. End of quote. Finally, the initial possibility around the 618 and a quarter area has been easily reached, leaving us with the secondary harder to reach possibility, now a secondary target X4 down in the 569.5 area. I have to say this is a big drop down for the market to swallow, given the congestion we have in the market prior to the US-Iran war. And that's between 595 even all the way down to 570 even. But for now, I will still labor it and lay it out there as a possible, much harder to reach target. Now, one feature here, and it only applies to this market rather than to the other grain markets. We have a possible late May to date, quite acute bear channel. And that's currently really quite steep, and that's between 569.5 to 621. I've drawn and highlighted it in dark blue, but I am very, very cautious about it. In part, it's because it is such a steep and acute bear channel, and in part because it really is only a 3-touch pattern rather than what I hoped for, which was a 5-touch pattern. As I suspect the piercing of the upper bear channel line yesterday, especially close to the virtually flatlining gold long moving average, well, it might possibly be the undoing of this pattern, so watch this space. London UK feed wheat. There are 2 key long-term patterns here to bear in mind, with a common neckline extension, which is highlighted in dark blue on my daily chart, and that's currently 169.30. Please remember that level. I will shortly detail these patterns, but first, I would like to discuss the recent action over late April, May, and now June. First off, we are still within the purple end of June to late October 2025 bullish shift pitchfork, in between the purple middle tie and above, which is currently at 185.85, and the purple lower time below, currently at 164.30. However, the main recent pattern we created had been the late April to late May head and shoulders top. We broke down through the neckline of this pattern 5 weeks ago and reached down to both the primary and the harder to reach secondary targets easily enough. So we now need to discuss whether the action since the start of June is forming a possible bearish halfway hesitation or not. I'm sorry to say it's really too early to really say, as we have dropped down to just above the combination of the flatlining gold long moving average, currently at 169.50, and that earlier mentioned dark blue neckline. Now, I did say last week, and I quote, we would have it's a long quote, we would have an initial possibility down in the 170 zone, close to that key neckline extension and the slowly rising gold long moving average, plus a harder to reach secondary possibility down in the 162 even zone, where we have the congestion from autumn and April 2025 and spring this year. These are not targets yet, just possibilities, and will only happen if what we see developing throughout June becomes a corrective hesitation. However, much as I said in Kansas City wheat and Paris milling wheat, and also in Minneapolis wheat, this is early speculation on my part, and it may not happen, but I'd rather get it out there now and look foolish than look a bigger fool if prices start motoring lower in between my commentaries. And that's actually quite a lot to digest, especially as prices have dropped down to the initial possibility, bounced, and so far I've gotten stuck there. So with all this in mind, let me now discuss the longer term points once again. The same points I've been discussing here for, well over a year and a half, or some of them were things that I noted back in my annual commentary back in August 2025. To see these, it's best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 23 to April 25 bearish cat's ears pattern. Now that's akin to a double top pattern, but formed after a big fall such as the fall we had in early 2023. As well as this, we had an even longer term second pattern, an August 2020 to April 25, very large head and shoulders top pattern. These two super long-term patterns both rely on one single feature, and that is their common neckline, which is highlighted in purple on my monthly chart. Currently 169.30, and it's the same as on the daily chart I just spoke about. Now, for the bearish cat's ears pattern, its time has come and it's gone. But we still look to the longer term top head and shoulders top pattern as still a live pattern with a primary target X5 down in the 64.20 zone, close to where sits the oldest uptrend I have of any of my 250 or so charts. That's the 1975 to date. Yes, a half-century old uptrend, currently at 66.35. I am not even going to give you my secondary harder to achieve target for this pattern, as it is below zero. Please, please, please bear in mind that these are very long-term targets, stretching possibly over many years. But they are still targets below for such of these patterns above. Now, that all being said, July 2025 with changeover through a major spanner in the works, such long-term patterns. The reactionary immediate countering monthly key reversal up for July last year went back above the purple neckline, but stopped. And that stopped at the 50% absolute Fibonacci line on 180.5 and just under the bright green 2023 to date upper bear channel line, which is currently 167.65. Just under or just over, I should say. The question this poses, it's a longer term question, is whether July 25 has just a reactionary single month move higher or the beginning of something else. I've said about this for 4 months now that these two bearish patterns will not be the way forward, and now that we have what we have now is actually a base for a move higher. March provided a single monthly close barely over the green short medium moving average line, and that's April did much better actually, barely over the bright green upper bear channel line, and April did much better for clean clear close higher. However, and I have said repeatedly how I would like to see a minimum of at least one more month, ideally the close of May, but over the bright green upper bear channel line, so upper line to verify this move high, and ideally over the 50% absolute Fibonacci line at 180.5. Well, we saw that strong close for May, but the pattern for May was a bearish one, which was a shooting star pattern, type 1 bearish. And June just formed a bearish open and close black Mariposa. Just formed a bearish open and close black Mariposa, tempting the bright green upper bear channel line as well as the purple neckline to move back up into one that is heading higher as prices seem set to test once again the important common purple neckline. It also raises the question here as to whether the whole 2023 to date action could be the start of yet another, perhaps an opportunity for even very large reverse head and shoulders pattern perhaps. So watch this space carefully as time will tell. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.